we do a soft credit pull. So I think as I watched when you profiled our company on your YouTube channel, you were right in indicating that we don't affect a customer's credit score by applying, because we just do a soft pull. We like to think of ourselves, I know that the catchy phrase is like fintech, and it's a great word and all, but we really see ourselves as a tech-enabled lender. We like to call ourselves that instead, because we are a lender first and foremost, and we use our technology to try to do these things fast and efficiently. In the small business world, if you don't do things quick, there is a competitor that's going to come in and do it faster and better, no matter what.
And in today's video, we have a special guest. We have Justin Lito, CEO of Idea Financial. Pleasure to have you on, Justin. Definitely appreciate taking time out of your busy day to speak with us. I know a lot of our subscribers have a lot of questions that they wanted to just have addressed in terms of Idea Financial, what Idea Financial is, and what you guys have to offer. So definitely a pleasure having you on. Welcome to the channel.
No, thank you, Antoine. It's very impressive what you built here. We're excited to be speaking with your loyal following.
So let's jump right into it. So tell the subscribers a little bit about yourself, your background, and where Idea Financial kind of fits in the overall business lending landscape.
Sure. So I'm actually not from the space, which I think adds to the story a little bit. My business partner, Larry Basuk, and I, we started Idea Financial after practicing law for about 18 years. So we come from way outside the financial services sector. We happen to be involved with some folks through representation that have some banks and some overseas interest in lending. And they gave us an opportunity to start this company here in the United States with some good funding. So the idea behind Idea Financial was really to try to find a niche in the market that was being underserved. And we did a bunch of research before we started the company. And what we realized was that while there are many good companies that provide term loans, merchant cash advances, and other more standardized financial products, there wasn't really anything outside of the banking sector that was a true revolving line of credit, so that businesses could have more flexibility with borrowing. So that's really what we set out to do this was back in March of 2017. And, as we iterated over and over over the last 4.5-5 years, we feel like we built a pretty substantial business offering to merchants now something that they couldn't get before, which is that flexibility that a revolving line of credit provides.
Let me ask this. So in terms of like borrower characteristics, right, is there a particular type of business that kind of fits into Idea Financial's business model? You have your traditional commercial banks, you have alternative lenders. How would you kind of characterize like the ideal business in terms of like data points, time in business, revenue, credit quality? What would be sort of like the minimum threshold?
So we like to think of our clients as bankable, so to speak. I know that there's, the word bankable is sort of ambiguous, but I think that most of the folks that are Idea Financial customers, if they had the time, the energy, or the patience to go through the process of applying for a bank loan, they likely would be able to get it. And again, that's really what we were going for. So the customer is a more prime guarantor as far as the owner of the business. The minimum FICO is 650. You have to be in business for at least 2 years. So we're not really doing the startup business. And while the minimum revenue sits at about $200,000, most of our borrowers have substantially more revenue, mostly in the low 7 figures. And as far as industry is concerned, we cover pretty much the spectrum. We have a couple of industries that we won't fund, and that's more for like the risk guys to address. I'm not sure exactly what they are off the top of my head, but we cover pretty much everything, Antoine, from the barbershop and the pizza shop to the commercial warehouse. Anything that you can think of on Main Street or that supplies to Main Street. And also, interestingly, because my business partner and I are both former trial lawyers, retired and reformed trial lawyers, so to speak, we have another brand that comes under the Idea Financial umbrella, which is behind me. You'll see that superhero, that's Level-esque. Level-esque is specifically tailored just for plaintiff lawyers and trial lawyers, like I used to be in my former life. We found that a lot of lenders sort of exclude lawyers from the borrowing area. I don't know why, but they don't want to lend to lawyers. So we've opened up what we think is a pretty competitive product to try to fund lawyers and law firms on the platform.
So is like I've seen previously with other companies where they might sort of provide an advance to plaintiffs that might be going through some type of class action, and just a way for them to get funds. Is that kind of similar, or is this a different type of financial product?
No, it's actually quite different. So what you're talking about is a very popular product. You're talking about plaintiff funding. And what that is, just so your listeners and your viewers understand, when somebody sues someone else, oftentimes the person who is filing the lawsuit either has a backup in the ability to earn money because they're very badly injured. They have very high medical bills. So there are a lot of companies that will advance those folks money while the lawsuit is pending. That's not what we do. That's a great business, but that's just not us. What we're doing instead is those lawyers that represent those victims of whether it be medical malpractice, premises liability, auto accident, product liability cases, those lawyers are advancing all of the costs before this case ever gets to trial or is settled. So those can get pretty expensive. In my experience, when I was practicing law, an average medical malpractice case would cost me, in the six figures before I ever had any guarantee that we were going to get a final result positive for the client. So what we do is we provide insurance for those lawyers so that if they lose their case at trial, they can get all that money back. But more importantly is we provide loans for the plaintiff lawyers at a very reasonable rate so they can finance those cases with our money instead of theirs. So that way they don't lock up all their money for a long period of time while the case is pending, and they can use their own cash to either build a practice, hire new people, and they can use our money, which is paid interest only, for the life of the case. So it really is sort of a novel approach to plaintiff lawyer funding. And it uses the very same framework that we've built with the small business lending. We like to think of ourselves, I know that the catchy phrase is like fintech, and it's a great word and all, but we really see ourselves as a tech-enabled lender. We like to call ourselves that instead, because we are a lender first and foremost, and we use our technology to try to do these things fast and efficiently. In the small business world, if you don't do things quick, there is a competitor that's going to come in and do it faster and better, no matter what. It's a very competitive landscape, as you know. In the lawyer lending world, the amount of time and effort it takes for a lawyer to get a loan is incredible. It's weeks, months. They have to pledge their home as collateral. They have to buy life insurance. We remove all of that, and we've built for the small businesses to also help our colleagues really in the plaintiff's bar. So it's a pretty exciting new product, and it really covers it all the areas now on the small business lending side.
I wanted to back up and go over the overall life cycle of the Idea Financial term loan as well as the business line of credit in terms of the processing, kind of what that whole process looks like from initial application through funding. So could you elaborate a little bit kind of on the life cycle at each step? What does that look like from when a customer submits an application through when they ultimately get funding? What are the different layers within that?
Sure. So we try to make it as seamless as possible, but I'm always the first one to say that there are human needs for lending. So we don't do everything through automation. I personally, as a business owner, think it's a mistake to rely on a computer for everything. And I could explain a little bit as we discuss this, but we have everything online as far as the application process. And it doesn't take a lot of information really to make a credit decision. It's really a name, social security number, EIN. We do a soft credit pull. So I think as I watched when you profiled our company on your YouTube channel, you were right in indicating that we don't affect a customer's credit score by applying, because we just do a soft pull. And once we get all that information, a merchant has two choices. They can either provide us the physical bank statements, which has always been the traditional way it's been done in the past, but we also use an integration platform called Finicity. It's a competitor of Plaid's. I think it's owned by MasterCard at this point. And so Finicity is a reader basically that allows for us to pull that data. We know it's secure. We know that there's no fraud involved in the statements. We process that through a third-party processing system that can give us lots of information about revenue, about deposits, about whether they have other loans. And that really helps us make a credit decision very, very quickly. So through like the perfect path where all the information is provided and the bank accounts are linked, we can get an offer out to a merchant within 30 to 45 minutes. Now, we do have stipulations that we ask for in some circumstances. For instance, if we're unable to identify the merchant through the Secretary of State, we may want documentation to show that they're in good standing. That's one thing that sometimes happens. If we find a non-revenue deposit in the banks that's likely from another lender, we want to know the terms and what's going on with that loan. So our human underwriters take over. They ask for certain information just to solidify the offer, and then the offer goes out. And the way that the product works, again, we try to make it as simple as possible and as flexible as possible. Whereas with a term loan, all the money is sent to you one shot. You got approved for 100 grand. That's what you're getting, whether you need 100 grand or 15 grand. With the revolving line of credit, to the contrary, you can take only what you need, and you can take it on a revolving basis. So it's much more as a needs-based product as opposed to us throwing it all at you at once. And we think that makes it safer from a credit perspective and more friendly from the user.